Alrighty, well, good afternoon, everyone. Thank you so much for joining us for another one of our Tuesday classes. Today's topic is going to be cryptocurrency in a self-directed IRA, presented by myself, Brianna Clayton. I am an IRA specialist here with Quest Trust Company. And just to give everyone an overview of what we'll be covering in today's presentation, we're going to start off with some self-directed IRA basics. This will go over what the types of self-directed accounts are, who Quest is, and how you can get started on opening and investing through this type of account. We'll then go into some cryptocurrency basics. We'll want to lay the foundation for what cryptocurrency is, and then we'll dive a little bit into how you can invest into cryptocurrency inside of an IRA. There will also be a portion of this presentation where we'll be comparing what crypto looks like investing inside versus outside of an IRA. So if you're already heavily invested into cryptocurrency, there'll be some very valuable information about that comparison. Finally, we will lead into a market analysis to let you know some of the contributing factors and the due diligence whenever you're looking into making these types of investments. So that'll be a general overview of today's presentation, and we will go ahead and jump right in. Now, who is Quest Trust Company? For those of you who are not familiar with Quest, we are a self-directed IRA custodian. So this has actually led us to currently be one of the largest self-directed IRA custodians in Texas as of currently. Now, while we are located in Texas, we do have offices in Houston, Austin, and Dallas. We do currently have 20,000 active clients across the country. So no matter where you're located, we can certainly help you. Right now, we're sitting at about 100 employees, a third of which are certified IRA services professionals. We also recently had a group go through that exam as well, so we do expect that number to rise in the coming months. Very excited to see those individuals get pushed through that program. Now, under at our administration is about 2 billion assets currently that sits with Quest. 400 million of that is undirected cash. So for those of you who are looking for an opportunity, or even on the other side of that, and you're looking for your deal to be funded, there is a lot of money that sits in retirement accounts, really just waiting for the right opportunity to invest it. Now, with all of our educational seminars, we would like to let you know a disclaimer that Quest Trust Company does not provide tax, legal, or investment advice. We also do not endorse or otherwise recommend any types of services or products. With these types of accounts, they are truly self-directed. So this means that you will need to conduct your due diligence, speak with the proper parties like a financial advisor or an attorney when it comes to making these types of decisions in your retirement account. Now, specifically, self-directed IRA is actually a marketing term. What this means for you is that when you hear the term self-directed IRA custodian, you're really speaking to a custodian who allows you to invest in the broadest possible spectrum of assets. So with a typical custodian, let's say someone like Fidelity or a Charles Schwab, they will typically allow you to invest into public assets. So really think anything traded on the stock market, mutual funds, bonds, things of that nature. Now, with the self-directed custodian, we primarily handle private assets. So that will include things like private entities, notes, and the meat of the presentation today, cryptocurrency. Some of the benefits that we see often discussed when it comes to investing through a self-directed IRA, first and foremost, is diversification. A lot of people are already invested through their retirement accounts. However, they're currently invested primarily or in total through public assets. So a way for you to diversify your portfolio is to dip as well into the private asset space. So again, notes, private entities, real estate. This will allow you to either, one, move into a space that you know very well, or two, diversify your portfolio beyond where it's currently sitting. Now, an important factor whenever you're investing out of any type of account is going to be the taxation that accrues depending on where you're investing through, what you're investing through, and even potentially how long you're investing into it. So a huge factor, whether your IRA is self-directed or not, is the tax benefits that you receive because you invested through the IRA. Now, these tax benefits can vary depending on the type of account. Either your income can grow tax deferred or even potentially tax free, which we'll talk about in just a moment. This also allows an opportunity for you as an individual to invest into things that you may have more experience in. So that could be real estate, it could be oil and gas, or if you've always been a private lender outside of a retirement account, it allows you to now bring those types of investments into a retirement account instead, where you're able to have these tax advantages and really invest in what you know best in that type of account. And finally, and one of my favorite benefits of this account is social investing. Now, you may not hear this talked about as often, but it is equally as important, as you as an investor have the ability to choose your investments. That means that you can pick a property potentially in your community, and you will be able to improve that community, whether through a fix and flip renovation, or even just employing local contractors to kind of funnel money back into your local community while you also save for retirement. So as you can see, there are quite a few benefits, not only just from investing out of an IRA in general, but specifically a self-directed IRA, where you have the freedom to choose your investments and to diversify beyond your typical retirement account investments or assets that you see in those accounts. Now, we're going to briefly go over some of the types of self-directed IRA accounts. Again, self-directed IRA is a marketing term, so the types of accounts you see listed here are also offered with many other providers. But what it comes down to is the custodian what they will allow you to invest into. So briefly, personal plans, and probably the most common that all of us hear about, are traditional and a Roth IRA. A traditional IRA is contributed to pre-tax. It grows tax deferred, and then any distributions beyond retirement will typically just have you pay your income tax rate for those distributions, potentially depending on how much you're needing to take out at that time. Now, a Roth IRA will grow a little bit differently. This is an after-tax account, and it has the potential to grow tax-free once you meet a few qualifications. We're going to go ahead and move on to employer plans. These are going to be less common. However, these plans allow you a higher contribution limit than your typical personal plans would. Now, we call these employer plans because they are typically set up for self-employed individuals or small business owners. So there will be more qualifications for these few accounts. We have great webinars on our YouTube page, so I do highly encourage you to check out the education that we've provided on these specific accounts so we can go into more detail and you can determine which one may be best for you. And lastly, I want to touch on these specialty plans very quickly. This is a health savings and an education savings account. Now, these are for if you are just kind of getting started, either for your children or if you're looking to put money away for health expenses for the future. These we like to call the best of both worlds. Your funds do go in pre-tax, and any qualified distributions have the potential to come out to you tax-free. Now, I'm going to go ahead and just leave it at that for now, because for the purposes of today's presentation, for cryptocurrency, right now, the platform we are working with will not allow you to invest out of a health savings and a covered out education savings account primarily into cryptocurrency. If there are any updates on that in the future, we will certainly let you guys know. But I did just want to give you a heads up for those of you who may be interested. All right, so this is going to also be very brief, primarily because it is less applicable to this specific cryptocurrency investment that we're talking about today. But some of the people restrictions you want to be aware of if you do want to invest into things like notes or real estate is that there are people that the IRS directly disqualifies from you and your IRA transacting with. This means that you, as their IRA account holder, cannot typically lend or purchase an asset from yourself. So if you're lending money to a party, it needs to be a non-disqualified party, which is typically going to be anyone outside of yourself, your spouse, your lineal ascendants and descendants. So think your children, your grandchildren, your grandparents, your great-grandparents. Anything up and down that ladder, your IRA is prohibited from transacting with. Now, some transaction restrictions that go along with that. You're typically going to want to make sure that you're at arm's length away from any type of investment that's going into the IRA. You're not allowed to invest into the individuals that were mentioned in any company that they potentially own, control, manage, or are highly compensated by. So very important to remember, especially if you're dipping into the private entity side of investing. And finally, investment restrictions. There are very few for a self-directed IRA, typically things that do not have a hard valuation, that may have a little bit of trouble valuing in the account. So we're thinking things like collectibles, alcohol, things like that, that may not actually have a hard value that you're able to provide to the IRS, which is something that is required on an annual basis with IRA accounts. Now, along with the restrictions that we talked about, there's an array of investments that you can make out of the account. Typically, anything in the alternative space, with the few restrictions that we discussed in the previous slide. Now, these are the most common asset classes that we see: real estate, private entities, promissory notes. Real estate really refers to just the direct purchase of real estate. So your IRA is taking title to a warranty deed in some form. Private entity can refer to a number of things. Think private companies. If you're getting issued a private stock, this can also be any form of syndication and things of that nature, a joint venture, for example. Finally, promissory notes is really whenever you're lending out of the IRA. So whether you are going to be the lender from your IRA or you are the borrower from someone else's IRA, you would work closely with our notes department to help you out with the processing and the facilitation of that investment. And finally, the one that we're all here for today, cryptocurrency and the IRA, one of the newest investments that we're offering through Quest. This will allow you to take your retirement funds and invest it through a certain exchange into cryptocurrency. Now, what is cryptocurrency? It is a hard question to answer very directly, so I will go ahead and give you a definition, and then we'll go into a little bit more of the context, which is really vital when you're looking into cryptocurrency and what it is and how it would be a beneficial investment for you. So cryptocurrency is a virtual currency associated with a digital coin or token that uses an online ledger to secure transactions. Now, this means that there is some form of record keeping that is decentralized. So it is going to be on a computer because it is virtual that will log transactions that are associated with a digital currency. So a digital coin. Think if you were going to Starbucks and you had a Starbucks gift card loaded on your phone and they scan that off of your phone. It's very similar to that. That money is essentially digital in that sense, and then they can scan it and take those funds off from there. Now, the reason this is just a little bit differently is because that system with Starbucks goes through a bank, two different banks, in order to facilitate that transaction, while cryptocurrency will instead use a decentralized online ledger that is accessible by anyone who has the proper technology and setup to access it. So it's decentralized in that manner. Now, the value of cryptocurrency is going to be determined by the current supply and the demand of that given cryptocurrency on the market. So when there is a lot of interest, you may see that price rise. When there is little interest or less confidence, you will see that price lower. All right, so to really understand cryptocurrency, the context behind it is very vital. So we start in 2008 with the mortgage crisis. During this time, the confidence and the US-backed currency does begin to fall for a number of reasons. Now, I do want to mention a vocab word here briefly, which is fiat currency, which you will run into whenever you are doing your research into cryptocurrency. Fiat currency is what we refer to for, again, any government-backed currency like the US dollar or the euro, for example. Now, prior to the 2008 mortgage crisis, there were attempts at virtual currency. However, a problem quickly developed with is what called a double spending problem, essentially meaning that there was no way for them to verify that the digital coin was not already utilized for a transaction. There was no system in place for them to properly log and verify that information, and therefore there was a chance that these digital coins were being spent multiple times. Now, in this same year, Bitcoin, who has been working to develop this digital currency, seems to solve this problem with what is now known as the blockchain technology. So blockchain, what is it? It is quite confusing at a high level, but when you really break it down, it helps you understand what it is and why it is in place the way that they have it set up. So again, this is the ledger that is referred to when they say that all transactions are stored on a ledger. They're referring to this blockchain. So the blockchain is a ledger or a record of all of the transactions that may take place for any given currency. So for example, Bitcoin has its own blockchain. Now, again, this is a virtual and decentralized ledger, essentially meaning that it allows for multiple sources to verify any given transaction as long as they're connected to the network in which those transactions are logged. So as you can see to the right, there is a really wonderful visual on exactly what is taking place. As you can see, the transaction first being requested needs to then be authenticated. So what that means is whenever you choose trade, sell, buy on any exchange platform of your choice, it is first authenticated and a block representing that transaction is created. Think of this block as a line of code showing what the transaction is and who it originated from. Now, the block is going to be an easier understanding of the method because along with the new information as to what that transaction is, the other half of that block is going to be the previous transaction that took place. And in that way, these are all connected. So that block, that new one showing that transaction that you requested, will now be sent to every participant on the network. So think of a bunch of computers connected to the same server. All of them will be alerted of this new transaction, and they are going to then validate the transaction. Now, why would just random people validate these transactions? That's because these people who are connected to the network receive what is called proof of work, which is typically some form of cryptocurrency awarded to them for their efforts of mining that specific transaction and logging it on the blockchain. Now, because multiple computers are connected to this network, they're able to verify it and post it to the blockchain. And if for whatever reason, the others who are connected to that are not able to verify that exact same transaction, then typically it's not going to be approved. This is why they say that the blockchain is a secure method to log these types of transactions because it requires multiple sources of verification. Now, once everything has been verified, the individual receives their proof of work reward, whatever that may be. That block is then added to the existing blockchain, and the server that all of these individuals are connected to is then updated. So it's distributed across the network, and then that transaction is complete. Now, this sounds like a lot of information. However, it typically only takes about 10 minutes for this full transaction to be approved and posted to the blockchain. So now going into where we started, which was that mortgage crisis, the first establishment of Bitcoin, a couple years later, we see the actual first transaction that takes place with Bitcoin. However, this transaction was not a direct transaction. The merchant did not accept Bitcoin at this time. So what the programmer did was asked someone to actually purchase a pizza for him, to call in, put in the order. And what he did was instead reimburse that individual with 10,000 Bitcoins. So he was sent that amount just to call in and place a pizza order, which is now categorized as the first legitimate Bitcoin transaction. This happened only 2 years after the mortgage crisis, whenever they finally developed this blockchain technology in full. And at that same time, in that same year, Bitcoin's economy surpassed the $1 million US dollar mark, which is quite a large growth within just those 2 years. So stemming off of that, due to some of the success and the popularity that Bitcoin had in main media, we start to see the emergence of what is called an altcoin. This will be another vocab word for you. An altcoin, or an alternative coin, is referring to any coin that is not Bitcoin. So Litecoin, Ethereum, what have you, any coin that is not Bitcoin is going to be called an altcoin. So we see in 2011 that the first altcoin emerges with Litecoin. You may have heard of it. It is actually forked off of the Bitcoin protocol, essentially meaning that it uses similar technology to process that transaction. Now, 2013, this will be about 5 years after the initial time that Bitcoin took front stage. The market cap surpasses $1 billion, and a few online platforms begin accepting Bitcoin. So that means that places, I believe, like Reddit at this time, were accepting donations in the form of cryptocurrency. So this was very few and far between at the time. So it was a larger deal when these certain and specific platforms started to accept cryptocurrency payments. In the same year of 2013, we see the first Bitcoin ATM is opened, and we also see the emergence of what is now called a meme coin, which is Dogecoin. So shortly after, in 2016, we see the emergence of Ethereum, which it's important to talk about how these emerged and really what the difference is behind these altcoins. Truly, what makes each of these coins different comes down to a couple things. First, the technology that's backing the cryptocurrency can vary slightly or greatly, really depending upon the coin or token you're choosing to look into. Now, the second and the main difference is that the intended use of the coin typically changes. And so we can see that with things like Bitcoin versus Litecoin, which I mentioned, Litecoin being forked off the same protocol as Bitcoin. Now, the intention for that is that the idea is Bitcoin is for large purchases. Think about purchasing a car or a house. And this is because of that 10-minute processing time that it can typically take to verify the transaction. Now, Litecoin was established with the intention of being for smaller and quicker transactions. So it is a virtual alternative to traditional currencies, very similar to Bitcoin. Now, it is for low-cost payment. So the idea is if you're in a coffee shop and you're looking to purchase a cup of coffee for a few bucks, you'd be instead using Litecoin, which processes transactions faster than the Bitcoin blockchain would. So that's really typically the differences that you see is the technology and the intended use. Now, Ethereum works a little bit different than both of the two we've talked about today, as Ethereum is a programmable blockchain. It can be applied to numerous areas. What is most common so far, decentralized finance, of course, which is really the whole of what cryptocurrency is, and then finally smart contracts. So the ability for you to utilize and to program the technology that Ethereum offers is semi-unique, especially with the array of coins that we've talked about today. So what can it be used for? Why would you invest into cryptocurrency? And what would be factors behind the reasons you're investing into crypto? Well, the first one and foremost, this is going to be due to the volatility of cryptocurrency is the reason that we see that the primary use for it at this time is investing. Throughout the years, as I'm sure everyone is aware, the price has shot up and shot down in various directions, again, depending on the supply and the demand. So we see this volatility as a benefit for some individuals who are looking to get in when the price is lower and wait for it to shoot up, because while it's not guaranteed, it has proven to be an extremely volatile investment. The second is going to be the purchase of goods and services. Now, we see this actually increasing over the past few years, where you're able to purchase specific items, even homes to this day, utilizing cryptocurrency. Now, the idea is that this will only expand over time as the technology improves. And the final one, and something that we touched on briefly in the last slide, is the applicable uses of blockchain, such as smart contracts. So the idea is that these in the future would be most of what we do and how we transact is going to be online, and it's going to all be virtual. So you're able to potentially in the future see that blockchain technology as well as cryptocurrency as a whole will be able to be utilized for these everyday transactions. And so we're going to go into really cryptocurrency from the Bitcoin boom to today in 2022. Now, the Bitcoin boom in 2017 is really where they took main stage. Bitcoin was always talked about since 2008 all the way up until 2017. A lot of doubt in the space. However, this Bitcoin boom shows that the price rose to an all-time high of $19,000. That was a huge jump for Bitcoin, and not something that a lot of people saw coming because of the distrust generally in the system. Following that, we do see a Bitcoin crash in 2018, followed by a few years later, Bitcoin rising over 700% since the pandemic era, which was about March 2020. Again, this really speaks to the volatility of the asset and why you see that the primary use of it, at least to this day, is currently investing. In 2021, in 2021, Dogecoin's price increased 20,000% in 1 year. Now, this was also one that generally was not seen coming. And another reason why people are jumping onto this track for the type of investments they're looking to make, because this really showed that while there is a lot of uncertainty in the market, that volatility is almost always going to be there, because these are dependent, again, on the supply and the demand of the market, and the wind can blow either way. And there's really no way to tell which way that's going to be for certain, which really speaks again to the volatility and the reason that people are putting money into it to see kind of where it goes and how that may play out in the future. Now, by 2021, the market cap of crypto surpasses $2 trillion, which is a significant jump, as you can see, from 2010, an 11-year difference. They went from $1 million US dollars to $2 trillion US dollars, which is quite a jump throughout the years for these types of investments. Now we're landing in 2022. Right now, we see more retirement custodians like Fidelity, like Quest, for example, who are beginning to offer cryptocurrency as an investment through retirement accounts. Now, this is important because previously it was not something that retirement accounts dipped into. So this is an ability for you to get in right now, especially when the price is a little bit lower. As I'm sure you're aware, or you may not be, cryptocurrency has dropped dramatically, or specifically Bitcoin has dropped dramatically within the past year. Depending on how you look at it, this could be a great time for you to get in and watch that price either climb or drop, really just depending on what the market is going to look like in the coming years. So a lot of opportunity that's taking place in 2022, from them offering the investment to the price dropping, and then we will see really where it gets to go from here. Now we're going to go into a little bit about the exchange that Quest is currently working with. So in order for you to typically invest, you do need to find some form of exchange or platform to do so. Through an IRA specifically, we have partnered with Aeris X in order to allow our clients to invest into it. Now, there is a lot of doubt again around this type of investment, but we offer some information on the exchange themselves. We, of course, encourage you to do your research on the platform and ensure that it's a company that you're comfortable working with. But to settle some of those worries, we want to let you know that Aeris X is regulated both by the Commodity Futures Trading Commission as well as FinCEN, the Financial Crimes Enforcement Network. So there are regulatory parties that monitor these types of exchanges. If that provides you any comfort, it's always best to take a look at their website, and we will link that for you in just a moment. So you can take a look at the services they offer, some of the background of Aeris X, and see if that's something that you're ready and willing to engage into. Now, there is a stipulation to investing through Aeris X. Right now, they only offer 5 coins. I know they are looking to expand this, but as of today, they're offering the ability for you to invest your IRA into Bitcoin, Bitcoin Cash, Litecoin, Ethereum, and a stable coin called the US dollar coin. Those are your current options to invest should you choose to do so through Quest and ultimately through Aeris X. Now, Aeris X will not charge you a setup fee. However, they do have a trade fee of 50 basis points or 0.5% of the trade value. So if you are concerned about the fees that are associated, again, no account setup fee, but there will be trade fees to be aware of whenever you're moving money into the platform. All right, so now we're going to talk about and do a small comparison on what cryptocurrency looks like outside of the IRA versus inside of the IRA. There's some primary differences to be aware of, especially if you are already invested outside of the IRA. You'll want to know a little bit how it functions differently inside of the account. So this is going to be first an overview of crypto outside the IRA. The first is the purchase of cryptocurrency. When it's held outside of the IRA, you obviously have the freedom to choose the exchange or the crypto broker that you would like to purchase your investments through. Now, depending on the platform, your coins can be held a number of ways. The most common way, and I think one that we've all heard about, is going to be the personal wallet. The personal wallet is going to essentially be a key that is assigned to you. Think of it like a password. That password is your access into the wallet. It's very important that you keep that secure. It is your way of holding those coins virtually. Now, the second option, and something we've heard of, but maybe a little bit harder to wrap your mind around, is going to be cold storage, which functions similar to a wallet. However, it is actually stored in an offline server, which gives it the idea that it's going to be more secure than what a private wallet or a personal wallet would be, or a custodial wallet, because again, this is an offline server it can only be accessed by certain parties with that limited access. Now, finally, is going to be, could potentially be stored in a custodial wallet. That custodial wallet would typically mean it's being held somewhere like Aeris X through an IRA, where they will hold those assets in an omnibus account allocated to your account with them, but you will not have a form of personal key where you'll be able to personally access that. And that's typically because if you do need a custodian in place, it's most likely for some form of retirement or tax advantaged account where you need to stay arm's length away from that investment. So those are the main differences whenever you're looking to purchase and store cryptocurrency. This is what it will look like outside of the IRA. Now, next thing to be aware of is going to be the trade on cryptocurrency and how this differs. First of all, cryptocurrency can typically be exchanged for other cryptocurrency or fiat currency. Again, fiat currency is going to be currency that is backed by an issuing government, US dollar, the euro. And you're typically able to exchange them back and forth. So depending on the platform, you can exchange Bitcoin for Litecoin, vice versa. Obviously, Litecoin for US dollar back to Bitcoin, whatever you would prefer, completely dependent upon the broker. It can also be transferred between exchanges and brokers when it's held outside of the IRA. So that means that for this specific investment that you hold outside of the IRA, if you're holding it with one provider, Coinbase, for example, and you would like to switch, that movement and process is fairly simple, and you can do so as you wish. So if you ever want to move, you certainly can when the investment is held outside of the IRA. Now, typically when you liquidate the holdings from this investment, you're going to be subjected to tax on those earnings. This is because the investment is not held within a tax advantage account. And whenever you do liquidate and take receipt of those funds, that is going to be income for you. So you are potentially subject at that time to short or long-term capital gains taxation on the funds and on the earnings from that investment that you held outside of the IRA. So very important to remember these things, especially when we move on to the conversation about what cryptocurrency looks like inside of the IRA. Now, the purchase is going to be different because you're looking to instead choose an IRA custodian who one, allows a cryptocurrency investment, and two, works with an exchange that you are comfortable and willing to work with. For example, Quest works with Aeris X. In the future, we do plan to expand that list to other exchanges. Right now, it is just Aeris X. So your due diligence on your custodian and on the exchange itself is very vital in this process. Now, your custodian typically will work directly with that exchange that allows you to invest. You'll need both an account with the IRA provider as well as an account with the exchange itself. That typically will assign you an account number that will ultimately be funded by your custodian. Now, the trade of cryptocurrency is going to be very different here because through an IRA, you're able to purchase and trade within the platform and within your account once it's been funded. However, you typically cannot transfer back and forth between exchanges. You are also not able to transfer the assets that you hold with the crypto assets specifically, with one custodian to the next. Your assets will need to be liquidated to cash. The cash can be transferred over to your new provider, and then you would need to reestablish an account and repurchase through that account. Right now, the capability is just not there to work with other custodians in order for us to move these assets around. So until that process and system is developed, it is important to note that any movement of your IRA crypto assets is going to always need to be liquidated before you receive it. So we cannot distribute the coins that you hold in your IRA to you directly, but we can distribute the cash value of those coins to you directly. So that liquidation process is always something to be aware of. It's a question we get very often. Just unfortunately, at this time, there is not a process set up between custodians to allow that easy movement back and forth, like as if you were outside of an IRA. And finally, the most important one, I believe, whenever you are investing and choosing to invest into crypto through an IRA, is that your gains on cryptocurrency investments can either grow tax deferred or tax free, just depending on the account type. So referring back to some of our previous slides, the traditional IRA will allow your cryptocurrency investments to grow tax deferred, typically meaning that you will pay taxes on those funds in distribution, meaning you take personal receipt of the funds. While a Roth IRA functions a bit differently, your earnings can grow tax-free once you meet certain qualifications to then distribute those funds to yourself, meaning that there's a chance that the taxes do not touch the earnings in that account. Of course, again, this boils down to qualifications, which to touch on briefly, one is that you are 59 and a half. You've reached the age of 59 and a half. Two is that you have had and contributed to a Roth account for 5 years. So those are the two qualifications. Once you meet those two qualifications, your earnings can be distributed to you potentially tax-free. So that is why you see the Roth account being talked about a lot in the cryptocurrency space for that reason. So how do you do it? How are you able to fund cryptocurrency into your IRA? Well, it's 4 easy steps, and this is all going to be virtual. So first of all, opening and funding your IRA with Quest. We currently have an application that is completely online. You'll go through that process about 15 minutes. And this is for those of you who do not yet have your Quest account established. If you do have it established, then it is able for you to fund out of that pre-existing account. But if not, we will open your account with Quest within 24 to 48 hours. And then the time frame to move funds over will be dependent upon how you're funding the account, whether that's a personal contribution, which is the fastest method, or IRA transfer, 401k rollover, what have you. The time frame is going to be heavily dependent on that portion of the process. Now, our recommendation is once you put your application in with Quest to simultaneously set up your Aeris X account. They have similar processing times, so they should have your Aeris X account established within 24 to 48 hours as well. So they will assign you an account number and you'll be able to set up your online trading profile. There's going to be an application process with Aeris X, and ultimately what you're going to be filling out with them is going to be sent to you as a PDF. Now that PDF is going to be what you'll want to send over to Quest. It will let us know what your account number on the Aeris X side is so we can fund it accordingly. So that application package that we discuss, it will actually be submitted directly through your client portal. Again, everything is virtual. So for those of you who are familiar with filling out Quest's internal forms, the form that you'll need to fill out is going to be directly through the portal. You'll let us know how much we're sending, where we're sending it to, and then upload that application packet as your supporting documentation. So that is going to be the first 3 steps. The fourth one, the easiest one, we're going to fund your Aeris X account by sending them a wire or a check, an ACH, whatever that may be, directly to the account. So you'll be able to buy and trade within that platform as you wish. So once the funds are already in your Aeris X account, you do not need to come to Quest for any microtransactions that are taking place. You do not need to let us know, hey, I'm purchasing this much Bitcoin or this much Litecoin. All of that can take place within the account. Now, something I do want to mention around fair market valuation season, when we do require some form of valuation for the assets in your account, we will accept a simple screenshot from your Aeris X profile, letting us know what we should update your current account value to for this investment. And sorry about that. All right, market analysis. So while you're in the middle and you're conducting your due diligence on these types of assets, there are a few things that you'll want to keep in mind. Some of the drivers, what will push you to invest into crypto, some of the restraints, what may be holding you back from joining that crypto wave, some of the opportunities that could potentially lie ahead, and finally, some challenges that cryptocurrency is currently facing, some that I'm sure you've heard about that have kind of taken the main stage in the media during this crypto downfall in the past few months. Now, first is drivers. The mainstream adoption of larger coins like Bitcoin, Ethereum, and Litecoin, we see have had a push towards cryptocurrency. This means that we've seen, because other countries, for example, are adopting cryptocurrency as a form of legal tender, that pushes people to really believe more so in the cryptocurrency, to help dial back some of the doubt that you first feel whenever you're looking into this type of asset that contains just an overload of information. So having these nations that are adopting it as legal tender could be a driver for those of you who are looking for some form of validation for this asset. Now, something else to keep in mind, especially considering the reason that cryptocurrency, Bitcoin in particular, was created, is that it allows an increased transparency compared to current monetary systems. Now, that transparency refers back to the blockchain, the public ledger, where you're able to really view all of these transactions. So the increased transparency, the nationwide adoption of crypto as a legal tender, and the larger coins like Bitcoin, Ethereum, and Litecoin, which we are seeing and talking about more on a daily basis, may really help push some individuals who are looking to get into the space, or maybe even have a few questions about why they should be adopting this new investment. Now, restraint. So this is really what's going to be holding people back. Now, while price volatility is what some people see as a huge benefit, there are those who fall on the other side of the line and they do not see that as a huge benefit. Because it's so uncertain as to when it will skyrocket and when it will drop, that price volatility could potentially be holding some back from wanting to invest. Now, something to keep in mind with that as well is typically whenever there's a dip in, let's say, the stock market, there are others on the other side of the line, other investors who see that as an opportunity to get in the process, to start when it's low and wait for it to climb from there. But again, because of the uncertainty, that's not always a good driving factor for these people. There's also some uncertainty regarding the regulatory status of crypto. As I mentioned before, Aeris X, the exchange that we are working with, is regulated. However, because it's so new and because the restrictions or the regulations are not set in stone as far as today, that it does leave some uncertainty in the space. And it holds people back from really pulling the trigger on the investment itself because they want that certainty when they're investing. Last would be the lack of viability due to the current ability to process quick transactions. Now, we do see that there are some solutions popping up, not just with Litecoin, but many other coins and tokens that are being developed are now being developed with the intention of processing transactions faster. And ultimately, they're hoping to solve this portion of the problem with those new technologies as they work to develop them. All right, and opportunity. So the reason that people would want to invest into cryptocurrency, it really can be a number of things, but something that you'll want to keep in mind with any type of new technology is over time it will transform. So the early purchase of new coins is one of the largest opportunities that we see people discussing. That means that you can potentially get in on a ground floor of a coin that may potentially in the future show a lot of value in the market. Right now, if you're really looking for a comparison, the only thing that I can really compare it to would be something like Dogecoin, which, while it is not proved to be extremely applicable to everyday transactions and things like that, if you were one of the ones who purchased Bitcoin before it raised $20,000 in value, you can see how that purchase of the new coin could be an extremely valuable opportunity for you to start your investments with cryptocurrency. Now, investment opportunities with companies that will form around the crypto infrastructure is also one of the larger opportunities that we see people taking advantage of, or more so looking into. What does the coin do? What does the token do? And what companies are going to form around this new technology to both support it and integrate it into the mainstream media? Now, that is a very important note there. It is always, always important to not only look into the coin that you're investing in, but how that coin can be applied to everyday transactions. That really is going to offer you the best look as to whether or not the investment itself is something that you would be interested in, something that you believe in and trust. Now, finally, foreign investment opportunities in developing countries that are leveraging crypto to accelerate growth. We've seen this most recently with countries who are looking to utilize or leverage that crypto as they're growing their own country, putting more value behind their own currency. The opportunity is absolutely there for this to happen. And so it's always good to take a look into the background as to what it is crypto has been doing for these companies, for these countries that are adopting it in the mainstream. Finally, I want to touch on some of the challenges with cryptocurrency. First of all, overcoming regulators that are not open to the idea of crypto. For example, China has a ban on cryptocurrency. And so this right in itself kind of takes you back a step when it comes to the validation of the asset itself. So you see that, and it brings up some concerns, and rightfully so, which is why we always encourage you to do your research so you can get a full understanding of what it is, what it does, and what the future for crypto may possibly be. So the second is going to be security, the privacy, and the control of crypto assets in responsible ways. Now, the security and the privacy, Bitcoin specifically prides itself in being a coin that you can view all of these transactions. They're all publicly logged on this ledger. So with that, there is some concern on the other side for those who may not fully understand the technology that this public ledger can be accessed and potentially edited and changed. Now, there's a lot of education out there about how these transactions are secured, how your wallet can remain private, and it's always important for you to ensure your own security and your own privacy by conducting due diligence with any exchange that you plan on working with. Now, something that I think is really going to be one of the biggest hurdles as we try to integrate cryptocurrency into our everyday transacting is going to be the overall complexity of how to implement cryptocurrency. This is not something that's going to happen overnight. It will require some significant changes to the current infrastructure, depending on whether that's with the way that we transact, the way that we make payments and things like that. So it is certainly a challenge, and I know something that will be addressed over time as we continue to develop and really dive in to some of the additional information that's going to be surrounding cryptocurrency in the next coming years. But that actually is all we have for you on the cryptocurrency end. I do want to leave our contact information for you to get in touch with an IRA specialist here at Quest. If you have any questions at all regarding cryptocurrency, how to invest in it, how to set up an account, we have a few different options up here for you to either schedule a consultation with our team. Just go ahead and scan that QR code and we'll set you up with a specialist. You're also welcome to log on to our website. We do have a live chat that is always monitored by an IRA specialist, ready to answer any questions you have during our business hours. You can also give us a call at 855-FUN-IRAs. This is a non-automated line, so if you have questions and you prefer not to wait on hold for hours, we are the custodian for you because we will answer that phone. We will let you know what your question is. If we can't answer it right away, we will always get back to you. And that applies as well to the email below. If you have any questions, you want to set up an appointment, interested in our events, shoot us an email, iraspecialist@questtrust.com, and we will have someone get back to you right away. Now, before we close out today, I want to touch on some of our upcoming events. Like this one today, we host a class every Tuesday at 12 p.m. This is a webinar exclusively, so we'll have different presenters up here talking to you about different asset classes, things that are relevant like the Secure Act 2.0. We have a lot of our IRA specialists in-house who are happy to go over that information with you. If you ever miss a class, they are fully recorded. We're always happy to send you a link to the full recorded webinar. That way you can review it at your leisure. Now, the next webinar that we do also on a weekly basis, this is Self-Directed IRA Saturdays. This takes place on every Saturday at noon. Again, this is going to be an array of speakers talking about different asset classes. So if you are curious about alternative investments, whether those alternative investments are in an IRA or outside of it, we have some very valuable information and some amazing speakers who have ample experience in the industries that they're speaking on. finally, we have two more I want to tell you about. One is the virtual networking happy hour. So this is going to be a national happy hour. So for those of you who are either looking for an opportunity to invest your funds, or if you have the opportunity yourself and you're looking to crowdfund, this national happy hour will get you in front of an audience where you'll be able to deal pitch and network, and then you can get each other's contact information all virtually. We always have amazing host, Nicole Bacos. She's one of our IRA specialists here. I highly encourage you to attend. And that one is a really great event. It is not recorded, that happy hour, but like I said, all of our weekly classes will be. So please check out our YouTube and our Facebook. We always post our most recent classes first there. So it'll be a great resources for you. Now I'm going to touch on a very specific event. Typically in our Houston office, we do have a social as the first Tuesday of every month. That social is networking as well as education. This time around, July 26th, so next week, we are actually going to be hosting a networking social purely centered around deal pitching. So again, if you're an investor, you're looking for the opportunity, or you have the opportunity and you're looking to pitch to an audience, this is the event for you. You will be able to network with an audience who attends. We'll have time for you to come up to the room, let everyone know what it is that you're looking for, what you do, and see who may match up with that opportunity. There is a QR code, so I do highly encourage you to register. It will be one of our larger events this month, so we are very much looking forward to it. And just a heads up with the Sizzling Deal event, it will not be live streamed, so this one is exclusively in person at our Houston office. And last but certainly not least, I want to talk about our annual Quest Expo. We are hosting this event in Houston this year, September 23rd to the 25th. It's going to be our largest event of the year. This is going to be a great event for lead generation, networking, lots of education. We have over 30 speakers as of current, going to talk to you about the alternative investment market. Again, not only inside of a self-directed IRA, the focus is primarily alternative investing. So if you are interested in the space, you want more information, or you're really looking to get your name or your business out there, this is going to be a wonderful event for you to attend. Again, September 23rd through the 25th. Unfortunately, our early bird pricing did end, but I do have a discount code still for you. It is Clayton 30 right there at the bottom. Please feel free to utilize that and take a discount on your ticket. We also have a room block, so if you're not local to Houston or if you want to stay in the hotel nearby, go ahead and shoot us an email at info@questtrust.com, and I will go ahead and send you over that link. That way you can take a look at the room block as well. But we certainly hope to see you there. This is going to be, again, our largest event. We're expecting over 800 people at this event. And yeah, it's very beneficial for you no matter what side of the line you fall on. And I think that's about all I have for you presentation-wise today. I did see some questions as we were talking, so I want to go ahead and address some of those first. Dave, how do we open accounts to be held with Quest? Simple process. It's about a 15-minute application. I will go ahead and send out to you if you'd like a link for that application. You can leave your email for us in the description. I'm happy to help. Otherwise, you're welcome to log on to our website. And again, our chat is monitored by an IRA specialist. They can give you a full consultation, get the account opened, and then provide you that direction on how to move your money into crypto. So thank you for your question, Dave. So for the coins within a self-directed IRA, thank you for the question, Todd. It cannot be moved into a cold wallet with Aeris X as of current. As of current, Aeris X is holding the assets in what's called an omnibus custodial wallet. So they hold all of the assets together with your specific investments tagged to you. So whenever you're looking to liquidate and things like that, they know exactly how much it is that you personally hold within your assigned account with them. And they'll be able to transact in that manner. At this time, they're not offering the ability to move these types of investments into either personal wallets or cold storage. Now, it could potentially change in the future, but we haven't received a lot of information in that regard. So it's best to just stick to the knowledge that they're currently going to be holding your assets in a custodial wallet for now. So thank you for your question. Because there is not really a personal wallet that you will be holding. There won't be a key for you. However, you'll be able to log on to your Aeris X portal at any time and see what your holdings look like, what your current valuation is, and all of the transactions that took place into your account. So always know that the crypto that you're purchasing is always going to be allocated to you. It's just not going to be held in something like a wallet for you to verify. So unfortunately, at this time, through the IRA space at least, you're not able to verify a wallet code. But they will give you a unique account number and a login, so you're always able to monitor your holdings in that manner. All right, Dave. So you're interested in how to open under a trust. Inside a Quest, is the trust the best method for holding the assets? So if I'm understanding Dave, I believe that whenever you say trust, you're not referencing an IRA, but a trust in itself. Correct me if I'm wrong, but if that's the case, if you were looking to do so, you would be able to establish a trust. In the instance that you did so, you would need to have a trustee that is not yourself, your spouse, or your lineal ascendants and descendants. So that's going to be your mainly your direct family members. So you'll have to designate a trustee to kind of direct that checkbook more than anything. And then you'll be able to invest into crypto under that umbrella. If you establish a trust and you invest into crypto under that umbrella, you're not then limited to just the Aeris X exchange, because now the trust is the investor. Instead of the IRA directly, the IRA is going to fund into the trust, and then the trust is going to invest into crypto, which opens you up to a few different platforms. Because again, directly through Quest, we're only working with Aeris X. With that layer of removal of the trust investing, you'll be able to open yourself up to a few different options. So as far as it being the best method, certainly up to you and your personal choices there. But it is a possibility. You'll just always want to keep that non-disqualified third party in place to manage any form of checkbook Fed account. And got a couple more from you, Mr. Dave. Is the custodial wallet to be held in a trust, or what type of entity? The holding. Okay, wonderful. Yeah, well, I'm glad that you enjoy the Quest portal. I'm glad to hear that feedback. The custodial wallet is actually going to be held with Aeris X. So they have the full access to that wallet. It is on their server. So as far as the type of entity goes, Aeris X LLC would be the owners, and they're the ones who will retain ownership of the assets, really just a holding company as far as that goes. So we have properties held in a trust under IRAs, HSA, solo 401k. So as far as the best way to hold crypto, again, it does come down to your personal preference. Because I say that because you have the ability to invest directly out of the IRA account. So you don't need to funnel these investments into a trust first before you invest. It can certainly be done directly. Now, putting those assets into a trust, again, will allow you the ability to expand the exchanges that you can work with. So if you do your research into Aeris X, you want more options, or they're not really at the level of service that you would want for your investments, the trust would be the best route for you to open you up to other options to invest through, specifically if you're going through the IRA method. And yes, here, let me type the name of the platform, which is Aeris X LLC. There we go. Yeah, beat me to it. So Aeris X LLC is the name of the platform. All right, I got one more question. On a platform outside of trust, moving crypto to another platform or individual, is there something like who is to verify code before the transfer of funds to the individual platform? I want to say, and if I'm understanding you correctly, moving crypto to another platform or individual, you won't necessarily be doing so through the IRA. Now, through a trust, you would really be working with either the individual or the platform that you're moving between. So let's start with the IRA. If it was an IRA and you're wanting to move that investment to another platform or to another individual, the holdings needs to be liquidated. And then from there, they can be sent over to a new platform or to a new individual. But there's no way for us currently, as everything is set up and as new custodians begin to have these types of investments for us to move them between platforms and between the custodians. So unfortunately, it's not an option directly through the IRA. However, if it's being held in a secondary entity like a trust, you should potentially have the ability to move that in between other platforms and other individuals as if you were investing outside of an IRA almost, because really, again, the investor that they see is the trust instead of the individual IRA account. So you should be able to do so if you're investing through an IRA trust, but not if you're investing directly out of the IRA itself. And Dave, the coins available currently, there's 5. They are looking to expand again, but right now that's going to be Bitcoin, Bitcoin Cash, Litecoin, Ethereum, and then one stable coin called the US dollar coin, which is actually a coin backed by the US dollar. So those are the 5 that they're offering for now. As far as staking goes, I am not certain on that. I'm happy to get you an answer. I can absolutely follow up with a team that we know of internally with Aeris X, and I can confirm that information for you. Unfortunately, I'm just not certain at this moment, Dave, but if you would put your contact information, I'd be happy to reach out to you. And are there any other questions that we have? I know it's been quite a lot of information. Luckily, everything is recorded, so all of this is going to be posted to our YouTube page shortly after the presentation. If there's anything that I did not cover or anything you'd like me to expand further on, certainly give me a call. My name is Brianna Clayton again. I am an IRA specialist here with Quest. We work very closely with Aeris X as well, so we can do our best to answer any questions you have. And again, we have a great contact with them, so if we can't answer it right away, we'll certainly get back to you with those answers. So just again, any other questions? All right. Thank you guys so much for joining. My email is right here below, so please feel free to shoot me an email if you're interested in opening an account with Quest. Let us know. Our IRA specialist team is ready to take your call. If you already have your account open and you're just looking for some direction, shoot us an email, give us a call. We can assist you from there. And again, thank you all so much for joining. I do hope that you enjoy the rest of your day today. Bye-bye now.